Good morning, traders and investors. Are you guys ready for another round of pre-market prep? We got another great show for you today. A lot to talk about. Loaded show today. We got economic data to focus on. Initial jobless claims coming out at 8:30. We'll mention at 11 a.m. the EIA crude oil inventories will be released. All eyes today on Jerome Powell's speech, 9:10 to 9:50. ECB releasing today their interest rate decision. Russian Vladimir Putin talking about Europe to freeze. Louise Truss, Prime Minister, announcing energy cap. Gamestop, Asana, McCormick, Dave and Buster's, and we'll get into a little bit of Kathy talk. Let us know that you guys enjoy pre-market prep with a thumbs on up to start the show. Of course, we got our special guest today, Scott Shellady, aka the Cow Guy, is here today. I know you guys will be excited about that. Hit the like button. Let's get it started. Rise and shine with pre-market prep. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. I see you guys excited that we got the Cow Guy today. So move on over, Joel. Move on over, Dennis.
Move on over. I get what your dude did there, Mitch. I get it.
Let's go. Let's get into this market.
I got dressed up today, too, again. Look, dressed up again.
Oh, nice.
I had to bring it back. I was having a bad day. And
no, when you were gone,
cheer myself up.
Yes, Dennis wore it every day.
Yeah, every day.
Dennis wore it 3 days in a row.
Every day.
Yeah.
Every day.
You know.
I just wear Joel's shirt. I missed you so much, Joel. I just have to, put you, and I have to see you. So whenever I'm feeling sad, I just look in the mirror and there you are.
Yeah, well, that's very nice. That's very nice. Okay, first of all, I'm doing a little switch up on the rundowns. I'll give you that in a second. Front month is December. It was a sneaky rollover. Usually the rollovers are on the second Wednesday. But because of the way things were last week, it was the first Wednesday of the week. So I'm going to show you guys the September contract. There's still plenty of liquidity in that, but we'll switch over to December, the final contract of the year. We'll do that on Monday. I'll get you the December levels. But we're up $1.75. Took out yesterday's high. Really no relevant number there at 39.96. And then we had a little retreat, and we didn't get to really any relevant numbers there. So we will be focusing on that close, 39.80, when Mr. Powell's speaking. Here's the big switch, folks. Dollar index. Can't believe I haven't been using the dollar index. I watch it, but I haven't up there. But the old mighty buck, down 37 cents at 109.46. That pulling back yesterday was an impetus for our rally. TLT, got to talk about the TLT, that, Treasury bond futures, that's what it reflects. That's up 61 cents. So little optimism going ahead into Powell's speech. And then crude, your other catalyst for the rally yesterday, took out that 85 and change level. It's rebounding a bit today, up 52 cents at 82.45. And then our old reliables, gold up $8, silver up 34 cents. And I'm going to stick with Bitcoin just because it's more widely known than Ethereum. That's up 290 at 19,215. So, Dennis, we're not getting that follow-through rally. We did a little bit last night, but this market's just kind of blah this morning. You think they're worried about the ECB?
It's choppy again. Yesterday was straight up. There wasn't a lot of chop actually yesterday. They just kept buying it here. To this morning, it's definitely chop. We're choppy ahead of one, the ECB data, which we're going to get, but two, mainly Powell's speech. So jockeying ahead of that. Let's see what happens. We're going to get a lot more information after 9 o'clock.
It's hard to be. With what he said, what it will be 2 weeks ago tomorrow. It's hard to, imagine him coming out and, being super, what could have changed in the last 2 weeks?
Can he be more hawkish though?
Yeah,
Or, maybe the expectations are so hawkish that anything he says that isn't even, if he says anything not hawkish, it's going to be construed as a buy signal. So he says anything not hawkish. So it's like the expectations for Powell are just so hawkish. So I think we're going to come under those expectations. So it's going to be interesting.
What if he says, this is an if with a capital I, what if he says, I shouldn't have used the word pain?
Oh, he's not going to use that. Come on, Joel.
No, that's what he said. I mean, that's what he said. That's what he said when I was gone, right?
He meant
more
it.
Pain.
He meant it, Joel.
I know, but what if he says, just a little bit, what would be just a tinge of pain? You just need to take a couple aspirin or something, I mean,
Joel,
powerful
if this was next week after the CPI data, maybe he could change his tune, but I don't think he's going to change his tune without any.
I don't think he's going to completely change his tune. I'm just wondering if he's going to retreat a little bit. Oh, we're 2 minutes late. I knew it. Having the 8:05 guest. Let's bring him on.
All right, let's go ahead. Let's get him on right now. Definitely, I just wanted to give the time because someone was asking when is the speech. It's 9:10 to 9:50 a.m. I'll give you guys the link also, chat here. If you guys want to catch that at 9:10, there you guys have it. All right, let me go ahead and pull that down, and let's go ahead and bring on our guest today a little bit earlier than usual, so definitely give us a like. Let's bring on, of course, Scott Shellady, a.k.a. the Cow Guy, is here. Everyone was excited to see you on today. It's good to have you back, Scott.
Good to be back. How are you guys doing?
Yeah, we're doing well. So you heard us just talk. You hopped on there talking about Mr. Powell and the Payne speech, and I mean he can't obviously back off that today. Why don't you just give us your outlook on that sneaky rally yesterday? Had all the catalysts with the dollar and crude and TLT. Are you falling for it, or you sticking in the bear camp?
No, I'm not falling for it. I mean, I think everything else was telling me that they're worried about when you see crude down as much as it was. Crude's kind of my tell right now. There's two camps. One that's worried that we're going to see a lot of the crises in Europe come our way, and I think that maybe not all of it, but we'll definitely see some of that come our way. And number two is that we're going to tighten so much that we're going to destroy the economy. That's the two things that crude's fighting over. So if we do see some sort of crises, there are some folks out there that think that they're going to see a spike in crude oil, but it's having a big battle right now with the fact that the Fed could put us at 4% interest rates by the end of the year. And I don't think the economy is anywhere near strong enough to handle that. So yesterday, the idea that the Fed's going to tighten or maybe even overshoot won the battle, and you saw crude get crushed. But there are a lot of folks out there that follow crude a lot, maybe even a lot more than I do, that know that we have an issue. We've got an issue with nat gas in Europe. We've got a headline out of somewhere in Switzerland about now you're going to face a $3,000 fine in jail if you don't have your temperature right in your house. I mean, it's bad, and so we're going to have to go with that, or at least wrestle with that going forward. And I think because of all those issues, I can't just get on board right now with the stocks. I think we're going to have more to go to the downside. I'm not going to try to pick the bottom, but I definitely think you're going to get a better chance to get stuff on board between now and the end of the year.
Test of the June low?
Yeah, I think so. I mean, where's all the good news that everybody thinks? I just think these are short bear market bounces. I mean, bear market bounces. I mean, I don't know where all the good news is coming from. Yeah, you have a PMI was arguing with well, we've had some conflicting news this week, but I still don't see. Look, if we counted inflation like we did in 1980, before I got in the business, we would be at over 17%. And there are some folks out there that think that the 3.7% unemployment rate is not being counted correctly, and it's much, much higher than that. So, and when I have 11.2 million open jobs and 6 million people looking, that's very confusing too. So nothing's adding up. And like I say, what we're putting into the gas tank is not coming out the exhaust. Something's broken, and nobody really knows what. And the Fed's going to sit here and put their pedal to the metal and continue to tighten. when I think that a lot of these, I mean, we've got half of the companies in America polled this first half of the year said they're going to be laying people off this year. There's going to be the last part of stagflation to fall will be unemployment, and I think that's coming too. So, yeah, we've got more to go. This is the biggest expansion we've ever seen in the history of our trading, and if you want to pull the plug on it, there's going to be more to go. I mean, you can't just say that we had it and it's over, all good, let's go.
Well, that's one thing too, and you can outline all these issues that we have, but then you look at valuations and you say the stock market's not cheap either. I mean, you add all that up and, you're trading 20 times earnings, 19 to 20. It's not cheap. So it's like it's giving a premium multiple to a market that has a lot of issues.
I totally agree. So, I've got my own show here in Nashville. We've got a guy coming on today that's an Uber bull, and he's always very, very positive. And I'm interested to see what he's going to say because I'm a common sensocrat. I try to keep politics out of it and just look at the numbers. And I'm getting the feeling that this 3.7% unemployment is really not really there. I feel as though that we are definitely in a recession. Look at what's happening in the housing market. There's a lot of folks that think a lot of their wealth is tied up in that. You know what how to sell my car. Somebody did I got research yesterday morning. Somebody did a Google search research and how to sell my car. That was up 145% last weekend.
This is the path. I mean, we've been outlining it on the show for about 6 months, but the first things first, when you start raising rates, people don't feel the pinch right away. But when they start to feel the pinch, what do? Well, they don't buy cars. And, what do? They maybe start selling some toys, selling some cars, trying to raise some cash, not going out for the fancy dinner, and then just slowly, slippery slope, obviously gets to a point where maybe we're missing some of those car payments, maybe we're missing, and then obviously in a worst case scenario, it starts to hit the housing market as well. But I challenge it too. I mean, I see so many people on CNBC popping on their analysts saying, "Oh, we'll be at all-time highs by the end of the year." And what? Unless we just fundamentally disconnect from the markets again, I don't see the recipe to get us to all-time highs. Is there a silver lining? Is there a possibility, Scott, somehow that we could get to all-time highs? By even say 6 months from now.
Maybe if the Fed slows down and we have record short interest. I mean, maybe you could. I don't know about that. I mean, not even that. I'm trying to be.
No.
I'm trying to figure it out too.
That's a little Pollyannish, We're right now. I feel like we're whistling by the graveyard. And I don't want to be all doom and gloom. I'm just trying to call it like it is, and that's okay. And there's still a lot of opportunity. That doesn't mean that there's no opportunity, but you just have to sit back and take a look and do the old Ben Franklin test, the positives and the negatives. And I think right now the negatives outweigh the positives 3 or 4 to 1. And I still say that we're going to be in a recession. I don't think it's going to be a soft landing anymore. It can't. I mean, arguably, some folks have gone out there and said we've already started a hard landing. But when you start to see the unemployment that's going to be the last thing to go. And the Fed's already said it. I mean, all we got to do is listen to what they said. Basically, They're saying the quiet part out loud. We're going to raise interest rates. We're going to destroy the economy, and we're going to raise the unemployment rate. We're going to put people. I mean, I've been doing this 35 years. I have never heard the Fed say we're going to put people out of work, ever.
Yeah, they're definitely being hawkish there. Now, how bad do you think things are really going to get with this energy crisis? Because I know a lot of traders are still kind of having this bullish upside outlook for natural gas and oil. How bad do you think it's going to get, Scott?
Probably not as bad as everybody thinks, but it's going to be bad. I mean, I lived in England for 16 years. The new Prime Minister Liz Truss just instituted a cap on energy bills there because there were talks that 70% of UK pubs were going to go out of business this winter because they couldn't afford their power bills. There are other measures, and by the way, those are more inflationary tactics that are going to go against the Bank of England and the ECB. We've got this big argument between central banks around the world, and now some of these governments are falling into some difficult times, and they're putting out things that are going to be, I mean, heck, we've done it here too. They're putting out policies and bills and help to their constituents because things are bad that are just going to start to work against what the central banks have been doing. I mean, so that you've got, the Bank of England raising rates, but at the same time, she's capping energy bills for 2 years. That's inflationary, folks. I don't care what you say. So we've got a world of hurt just starting. Okay. Now it's probably not going to be as bad as the worst person talks about it, but it's definitely going to hurt, and we can definitely not ignore it. The difference is that this country, we actually can do something about it. We're standing on, depending on reports, between 150 and 450 years worth of nat gas. We just have to be able to help ourselves first. I call it the airplane moment, right? If we helped ourselves first, if we put on our mask first, then we could help other people put on their mask, right? We could really do a lot to get some of this nat gas out there, but we're not. And so, again, I don't want to get political, but I'm just telling you right now, guys, the World Economic Forum, the Klaus Schwabs of the world, the greenies out there, they've gotten into all the parliaments. They're in our Congress as well, and they're going wind and solar regardless of whether it's good or not for the country. And that is also adding big time to hunger, because we're not able to use some fertilizer because it takes nat gas to make it. So they've got all these limits on making fertilizer with nat gas. We've got countries that are going for a great green score or a great ESG score. And Sri Lanka and Ghana are out of business, but they had a great ESG score. And a score of 100, they had a 98 in Sri Lanka, a 97.5 in Ghana, and they're gone. Now here in the States, thank gosh, we're only at 52 out of 100. But these people that are we're trying to go green at the absolute wrong time. They're making it a revolution, not an evolution. We've got an energy crisis in Europe that's moving into food and famine.
But the market just doesn't. I mean, have you ever seen a market, move more contrarian to the news for this natural? I mean, what a rug pull in this natural gas, right? They shut it down, the pipeline over the weekend, right? Everyone's long, major margin calls. And boom, it gets smoked. And then the same thing with oil. Every analyst, except for the guy over at Citigroup, is calling for $120, $130 oil, right? You have, you have backwardation in the markets. I mean, have you ever seen a market move more contrarian in news? And then I just want to throw in here, ECB does their rate hike. We got a little dip on that, but I guess they like the rate hike there. But back to my question, but the market just moving so contrarian to the news, unless you want to just say, well, the overriding recession is the predominant factor and the demand's going to drive.
No, well, okay, they've definitely said, the Fed's definitely said, look, the Fed's got only one tool: destroy demand. They can do a little bit of balance sheet work, but they're going to destroy demand, and they're doing so as we speak. That's all they can do. Nobody's talking about the supply side at all, and I've talked about that ad nauseum. But you go back to the market. Look, I'm 56 years old. I've been doing this for 35 years. You got to remember, we've got people that are managing money in their early 30s that have never seen what we're going through right now. I traded in London over when George Soros tried to break the Bank of England, and I saw interest rates on a Wednesday morning go from 10% to 12% to 15% to back to 10% in one day. Okay, so you've got a whole brand new group of money people that are involved with this, that I think are a little Pollyannish, and they whisper, they whistle by the graveyard. And I don't want to, again, I'm not trying to be doom and gloom. I'm just trying to be realistic. And I have never seen a market to be this, ignore a lot of the things out there. But you know what? No, everybody ignored it the first time around, and look what happened. And I think it'll happen again. I think you're going to get another chance. I'm not calling for the end of the world. There are other guys out there that are calling for the end of the world, by the way. And I don't believe if you bet on the sun exploding and you win, everybody's dead anyway. See, that's not a good bet. But I'm not that far. But I definitely think there's more opportunity. There's going to be some great stocks to pick up. I love energy because everybody hates it, right? I love energy because your children are going to die still using a lot of fossil fuel. That's what it is. We're going to be using that for the next 100 years. This idea that we're going to get off of it is absolutely insane.
That is the truth. Well, thank you for joining us today, Scott Shellady, a.k.a. the Cow Guy. Chat's going crazy. Appreciate you coming on today, Scott.
All right, brother.
Have a good one. All right, let's keep going, guys, with the topics that we got today, but definitely ECB coming in here, raising rates by 75 basis points to tackle soaring inflation, or of course, at least that's what they're going to try to do. Raising rates by 75 basis points, a pretty big hike there for the ECB. A lot of people were actually surprised that they would go up to a 75 basis points. So let's see how it's affecting the markets. What do you see out there, Joel? Did it hit our market?
It had a drop, a pop, And now we're dropping again. So it did
A
get
little
well
gain.
over unchanged. See that what's difficult on a day like this is because you had such the run up yesterday.
Yeah.
Like
Yeah.
where do you step in?
Yeah.
If we start to decline today, I mean, yeah, do you step in at the pre-market low? Yeah, okay. Well, what are you going to lean on if if it takes out the pre-market low?
Yeah.
So it's a tough day, and if you're short. You got ran over yesterday. You're looking to bring it in. So right now, after that, this seems like we're staying red now. I gave you the close at 39.80. So until we can establish a sustained bid over 39.80, then I'll be leaning to the downside today.
The Bulls in the chat feeling the heat today. I feel them. They're fighting back the Bears. It's being like that type of market. I mean,
Very,
we've seen-
very, very tough month so far.
Yeah,
I
it's a
mean,
tough month.
and August was somewhat predictable. The sell-off was predictable. We were all over it on this show. Obviously maybe a week early, but we were all over it. Had a really good trading month because of it. Tough month. I mean, you started here on S&P. We went out at 395. We went down, then we went up, then we went down, then we rallied hard, and we're basically right where we started the month. So
That's
it
a
has
good
just
point.
been a chop fest so far this month. We obviously have a lot more information coming. I do believe the CPI data will be light. I do believe next week's data will be light, and that could be a catalyst. And I think you'll have other market participants front running that, basically getting ahead of that trade. So it would not surprise me if we actually do see some strength. We talked about that, the last couple of days, that there's good support at 390. We cut through just momentarily 2 days ago, but right on the kisser, we bought them at 390 on the SPY yesterday. I think there's room to 410. I'd be a massive seller up there of stocks. I would sell more stocks. But I think, as a trader, I think you actually could buy pullbacks here in the next couple of days. If you get back down to 393, 394, I think you're going to find buyers here now. I think people are looking at, the commodity prices coming down and thinking, hey, that CPI data might not be that bad. So obviously we don't get that till Wednesday, maybe a little bit early on that trade. We talked about, this yesterday, and obviously a little bit early, but they're trying to get ahead of it. I wouldn't be surprised to see buyers in the dip. So I'm actually, as a trader, I'd be buying the dip.
All right, let's keep going into the headlines that are out there. There's macro talk out there. I'm going to just try to put a quick bow on it so that we don't have to go into too much and we can go into more micro outlook. But of course, yesterday, Putin talking about that he would leave Europe to freeze. And so otherwise mentioning pretty much still strong arming energy as a weapon of war and what's going on in Europe right now. And then Prime Minister Louis Truss today with a broad stimulus package to help Brits with soaring energy bills and attract investments in the energy sector. I think that last little part is actually interesting because a lot of people are, focusing on the energy side, but investments in the energy sector is how we saw solar stocks kind of rip up last time. So I'm taking a look at some solar stocks. I know that there was a First Solar upgrade mentioned today. And so just to kind of tie that in, that was by Goldman Sachs, a double upgrade for solar stocks to buy from a sell. And so we'll keep an eye out on that. And then also with this cap on energy, now a typical household will not pay more than 2,500 pounds or 2,880 per year. And the cap is going to be in place from October 1st. Of course, a lot of people are mentioning how will the bill be funded and will this just cause inflationary pressures?
So much information there. Let's just take it to energy first. Let's just go to the oil trade. And you can sit here and you can analyze all the macro headlines, but price, from JC Peretz, price don't lie. And I mean, you look here, US.
That was a big breakdown yesterday.
Breaking down yesterday.
I mean,
we can keep getting rah bullish, trying to talk energy prices up. The oil market is telling you something completely different. It's telling you recession. And we have predicted it on this show. We've been bearish oil for a long time. Again, early. I missed the May run up in the energy stocks, but I'll tell you, I didn't get hurt in the June, July, August sell-off. So I think you're selling rallies in energy. Yeah, maybe there's a long-term bullish thesis here, but it's hard to just jump on this energy bandwagon here when I think we're going into a recession. And I think the Fed's going to force us into the recession.
You know what? Well, first of all, I want to go through this exercise here real quick. I do it a lot, and I'm not sure that that everyone gets what I'm talking about. But the financial futures, the S&Ps and the bonds are quarterly contracts, right? March, June, September, December. That's why you hear me talk about the rollover. And it's a pretty big event that leads up to the quad, which for crude oil contracts, they expire every month. Every single month. So whether it's a contango or backwardation is an indication. And so right now you have the October contract, right, trading at 82.70. If you go to the let's just go out to December, CLZ 22. Okay, it's trading a buck lower. Okay, so the expectations from the hedgers, from the big traders, is that the December oil is going to be, when we get to December, the prices are going to be lower. This is what the futures markets are predicting. This is what the futures markets have been predicting since it went 120. Now, the spread has been a lot bigger at times, and the spread is starting to narrow. But right now, what if you go out to let's go out to CLZH23. They don't have that yet. So CLH 23. Let's go out to March of 23. I'm not doing great on this exercise, but I think you guys get my. There it is. All right, there you go. March of 23. $80. Another buck lower. That until that
nothing looks bullish
around.
There to me.
Yeah. What looks bullish?
I can't. It looks like a head and shoulders.
Yep.
That looks like a head and shoulders top. And if you think we're going into recession, have fun with that oil long.
Hey, it's one of the battles I think that's happening there, Dennis, and I understand you guys' view on oil. But natural gas, then, that's still holding on up. I know it's pulled back, but it's still holding on up. I mean, I don't know if it's all, just maybe oil's coming down and maybe we'll see some rise in some other kind of commodities here. And natural gas is another thing. I've been starting to see wheat coming back. And so I think, that's what people are watching. There's a split here between oil and natural gas. It might be oil still coming down, but natural gas going up.
I see natural gas coming down on this chart here now too. I see toppy, and obviously, and I'm not a technician. I use charts. 10% of my trading is probably charts. 90% is just overall, relationship based.
Mm-hmm.
But I'm looking at that chart and thinking it feels heavy. It feels like you topped already. It feels like, if you go into even the UNG, and I obviously, I don't buy futures quotes because they've always dinged me as a professional as a lot more rate. But
what about
I can
now?
easily look at the UNG.
Maybe you're not a pro now, Dennis.
Yeah, maybe I can actually go and try to I could argue that now because I did leave Bright Trading. So yeah, so maybe. But in any regard, I don't need futures quotes. Everything else, there's so many ETFs that track everything. It's like, why do I need to pay $600 a month for S&P futures quotes when I got SPY, obviously just as part of my ARCA package. So there's just no need for it. But in any regard here, taking us back to the original thing is I think we topped out here too. I think commodities have topped out. I think Kathy Wood, and we could bring into that conversation, is correct to a certain extent that, we have had, serious commodity deflation here in the last month or two. And that is going to show up in this CPI data. And that's why I want to be very, very, very clear here right now. I think we're going to see a run up here in the next week. I think we're going to see some people buying stocks ahead of that CPI. Am I loading up and getting long and this is the bottom? No, definitely not, because they're still overall fighting the Fed. But doesn't mean you can't be bullish for a few days and an overall downtrend. We just sold off substantially. We talked about that. We talked about the 390 support. Yes, it got breached. 410, my target would be 410 on the upside. If you're taking longs right now on SPY or taking longs on stocks, I'd keep an eye on SPY at 410. I think we can get there. I think the CPI data can bring us there. I think it's going to be a replay of last month, to be honest with you, Joel. I think, this market forgets so quickly. What happened last month? Everybody forgets. What happened?
Everyone got super bullish at the top.
Well, yeah, but why? What
because the
happened?
inline
It was
CPI
the CPI data. The CPI
Inline.
data was a little bit light, just a little bit light.
Yep.
And then we had a 3-day rally after it, and then Powell pulled the rug. This is happening again. I mean, to Mark Twain, to Ryan Dietrich, history doesn't always repeat itself, but it often rhymes. This is setting up to do the same thing, and the market doesn't even see it. So it's setting up to do the same thing here, where we're probably going to get a little bit of a run up ahead of the CPI as people are anticipating that's going to be light, and it is. I think it is going to be light. And then you could get that rally afterwards, and then you'll probably have a Powell rug pull again. It could happen the exact same way. When the thing's set up the same way, why not play it the same way? So am I buying today? Not maybe after we just ran up 80 points, but if we pull back 393, 394, there'll be a headline. There'll be something to knock us probably back down because there's a lot of nervous Nellies out here. I think you do buy stocks ahead of the CPI. I think I want to be long ahead of Wednesday.
All right, let's get into earnings now. Let's transition to GameStop. EPS had a loss of 35 cents, beating the loss of 38 cents. Estimate sales at 1.14 billion, missing the 1.27 billion estimate. GameStop says quarterly sales declined and losses widened as cash pile shrank and inventory swelled. They also announced a partnership with FTX. The partnership intends to introduce GameStop customers to FTX community and its marketplace for digital assets. In addition, with collaborating with FTX on new e-commerce and online marketing initiatives, GameStop will begin carrying FTX gift cards in select stores.
Didn't participate in yesterday's rally whatsoever. And don't kid yourself. The reason this has had just an awful month, just go back to relationships. It's absolutely nothing to do with GameStop. It's everything to do with Bed Bath & Beyond and Ryan Cohen. Ryan Cohen pulled the plug on Bed Bath & Beyond, and they have been selling GameStop ever since. They've been selling it nonstop. And I don't know, now the market's lost confidence in Ryan Cohen after that. And this was the whole reason that the bull thesis here on GME. So, I mean, it's sold off. It's way oversold. You can go to your RSI, Mitch. I can see it on the chart. I don't need an RSI to see this. It's massively oversold. So it could bounce up, which it tried to do last night, but that bounce is already getting faded. We had 28.5 last night, 25.60. This gave back over half of last night's gain. So, I mean, it was the sell signal when Ryan pulled the plug on Bed Bath & Beyond. That's just relationship based. If you were short in GME off the Bed Bath & Beyond, Ryan Cohen selling his stake, you kicked ass.
Isn't this all right? August 8th. Yep. Triple BY picked Pete Deliver. Isn't this like whole FTX in crypto thing? Isn't that like so 2020 and 2021? You know, like don't they realize what crypto's doing right now?
There's waves, and the wave has definitely gone away and not towards. And so I think that, they're just late to the party. They were late to the party with their NFT platform, and they're just trying to be on the late majority. But we know how the bell curve works. You got to be a part of the early adopters, not the late majority. This is clearly the late majority, and not going to go well, I think, in the long run.
People are stuck, man. There are people stuck in this crypto, and for much higher prices.
Oh,
and,
Joel,
it's just overhead supply, man. Just overhead. We're leaking bad here.
It's not turning around anytime.
So jobs number just hit there. Let's get that number up here. So
jobless
claims
data
coming in
today. I can't even get my head on straight.
Yeah, you can't. 222,000 versus 240,000 estimate. So jobless claims coming down here, and not a good sign, right? Not a good thing for the market, because that just gives the Fed more ammo. So here you guys see it, jobless claims going down. Well, leaves more room for the Fed to just continue saying that this economy is strong right now. So we keep getting mixed signals here from the data.
That's true too,
on at least if the economy is strong or not. And then just to kind of mention, yesterday, of course, the Beige Book was kind of pointing that the economy will get weak in about 6 months. So it's just conflicting stories out there. Now, are you looking at the data? Are you looking at the Beige Book? Are you looking at the talk out there? a lot of noise out there in this market, and it's hard to decipher, especially on a day like today when we're going to have Jerome Powell speaking at 9:10 to 9:50.
Oh,
yeah, it's tough. I mean, this market, and again, it's a tough market when you have so much information and you have a market that is dependent on this information, and they're all waiting for what's Powell going to say today. I mean, you can look at the charts how you want to look at them, but it all depends. He gets more hawkish somehow if he gets more hawkish. I don't think he's going to be hawkish enough. That's why I'm actually more inclined to buy the dip here. But I mean, it's not saying he can't. Maybe he says something like, "Oh, I'm thinking we're going to go a point." Well, the market would tank on that because they're thinking 75. So you got to throw out all the scenarios. Like you have to have it out there to know there's a bear scenario here too. I like the idea. I like the setup of the buying the dip to the 410 next week on light CPI data. I think it sets up well. I think it can happen. Powell could pull the plug on that today. He could just go boom and say, no, you know what? It's really, we're leaning towards a point. Boom, the market's right back down to 390. He says that. So I don't think he's going to say that. I think he's kind of going to go with the flow. I think it's going to be not hawkish enough, and I wouldn't be surprised if he rallies on the Powell speech. So I'm short-term biased to buy stocks here, but anything can happen.
I got a level ahead of you. I
Give
see
it to me.
I see and this is pointing right to Powell too. Your high. Oh no, that's the high from. I'm looking at the high from last Friday. The Powell highs up here at 420, but I'm just looking at the high. Well, we got the. I remember on Friday. Oh, jobs data, we're looking good. And I'll go with the spider on this with you guys because of the rollover in contracts. Your high last Friday, 401.56. Your high last Wednesday, 401.24. So for me, I mean, I know I see your 410. I see what you're talking about. But to me, my head would be on a swivel seeing what happens if that spider gets back up to 401.50. That would still be a decent rally. That would still be 5 handles from here. But I see that as a major roadblock ahead of your 410.
It's just been a lot of little 50% retracements. That's why I'm sticking with it. People ask me, how do I get that? I'll just go through the math again. And
okay.
It's simple, Simon, grade 1 math. 430, maybe it's grade 3. 430 down to 390. Take half of that move, which is 40 points. Add on the 20. I get the 410.
It's the golden mean though. It's 61.8. I mentioned it.
See, I don't do any.
I'm gonna correct you when I'll correct you sometimes.
93.
Because 50. The thing about 50 is more closer towards 398, and so 390 is a 61.8. So that's where it caught.
Aren't they pretty close to each other?
I mean, there's still separation there. 398, 390s. I feel like there's a little bit separation.
Where are you getting 50 to 398? Because I'm looking 430 to 390.
It's 0.386.
I'll show you right here. So I can show you because I got the fib tool here from TC. I can show you the chart.
Show it to me.
So this is the fib tool right here. And so I'll just kind of delete this so you can see it. See these lines right here. So there's a line 61.8 retracement here. 50% is right here at 390.
What are you going off of though? Stop. What are you going
from
off
the bottom?
No. I didn't listen to me, Mitch. 430. I'm starting at 430 to 390. I don't care. That's history. I don't care what it did in June.
I mean,
430 to 390, and then I'm getting 410.
Yeah, you're doing this retracement here.
Yeah.
Okay, and
50%
so 50% back towards the 410. Got you. We were looking at the last move. I consider it from here first.
I don't care about history. Recent move.
The reason I consider it from here is that you look at for the ABC, and so there's the A, then you would look for the B, and then the C coming back down. So
I don't know anything about ABCs or FYGs or XYZs. I'm just going with the simple Simon. We just fell 40 handles. Nothing goes easy. Nothing's easy in 2022.
Nothing's easy in this
Bears.
market.
Doesn't like you go, okay, we just fell off 10%. Let's fall another 10%. It doesn't usually work that way. There's usually a retrace before the next big fall down. So, again, waves, you're moving in waves. Doesn't go bang, 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 and we just keep falling and we just go to zero. It's usually not the case. So
you got to hurt people. You got to look at the contrarian moves too. And if you're looking at the contrarian moves too, then it gives you, if it's not going there, like if you're looking, if your expectation, like if Dennis, the longer it takes to get to 410, the longer it takes, the more he'll be like, oh man, we're not getting that bounce. We're not getting that bounce. I pick, the 50% of the rally, we've chopped through that enough. I can't put a ton of emphasis on it. But it's just even if you have those levels in front of you, it's his expectation. This is what he's thinking. He's thinking out 2, 3, 4, 5, 6 days ahead. But if it doesn't get to that area, then you have to adjust or bust. But anyways, let's did we do Asana yet? Because Dustin Masovitz has been buying a lot of stock. Can we do some Asana here?
Do it.
All right, I'll get to Asana there in chat. I mean, you can look up if you like the ABCs or not. I mean, that's up to you.
I'm going to stop for 1 second. We're going on a tangent because I apologize, Mitch, because if it works for you, by all means.
I mean, it's not me. I didn't make the fibs. That's just what it is there. But
there's 1,000 technical analysis tools. So I'm just telling you what has worked for me and what hasn't worked for me. If the 61 works for you, if the ABCs work for you, if the XYZs work for you, continue to use them by all means. P&L, bottom line, speaks for itself. None of that stuff has ever worked for me. It's why I just, dismiss it, because it's never worked for me. But maybe, it's just not worked for me. Maybe it's not my thing. It doesn't mean it can't work for you. But if you're just first starting and you're trying to get into all these technical analysis tools, there's 1,000 of them there. You can get lost in them all. That's why I always just say start simple. Support, resistance, trends, and 50%. And that's it. That's all you need. And you can be successful with just those 4 things. If for whatever reason you found luck with the 61 or the ABC patterns, do it, continue to do it. But if you're just first starting out and you're like trying to take it all in, keep it simple.
All right, let's go to Asana's here. Earnings EPS at a loss of 34 cents, beating the loss of 39-cent estimate. Sales at 134.9 million, beating the 127.24 million estimate, raising their guidance here for full year 23 sales at a 544 million on the low end, 547 million on the high end versus 535 million estimate. So raise on the full year 23 sales for Asana.
Joel, I'm letting you take this. This market is just getting beat again.
Oh, yeah, boy. Oh, wow. We just popped over $24, so still making new highs on the pre-market session. 24.26 stands as your pre-market high. That's what I would key off. Oh, look at this candle right here, folks. There, got a level for you. 24.33. That was your high on August 19th. We just hit 24.26. There's your number of the day. Next.
All right, let's keep going. Let's get into the next stock. We can go to McCormick here. McCormick shares dropping after a gloomy outlook here. Expects Q3 adjusted EPS of 65 cents against the 80 cents that was the previous year. And then the consensus was 83 cents. So the consensus was higher than their previous year. Overall normalization of supply chain costs is taking longer than expected and pressuring gross margins, said the CEO, and the company expects full year 22 sales growth of 3 to 5% versus the previous outlook that was 5 to 7.
This is why it's hard to get bullish long term here, because you're going to continue to have random earnings warnings because it is not that good out there. So even though we can get bullish for a week here and maybe get a move up to 410, overall, I'm not adding stocks to the long-term portfolio because you're going to continue to get these random earnings warnings because the economy is starting to get hit. And I mean, this is getting squeezed on both sides. Obviously, labor costs, material costs, all adding up. MKC, random warning, going to hit the staples today. So, not surprising to start and see some other food stocks get hit on this news as well. General Mills is trading down. Kraft Heinz is trading down. Full disclosure, I have a position on a Kraft Heinz. Going back to MKC, Joel, just give us the technicals here, but we're breaking down.
You just took out the low of the move.
Yeah.
I mean, you're taking out the low of the move. So you just, and then, people are jammed from yesterday too.
Yeah, for
'Cause it
sure
went
they
from
are.
82 to 85. So, I'll just give you your next monthly low to keep an eye on. And, that's 79.27. So keep an eye on that 79.27. And then, man, until you get back above that former low of the move, let's just call it 81. I mean, it's going to be tough. And this is a thick stock. Like, people have been in this one for a long time. Let's say, the pandemic. I've been holding on, holding on, holding on. On a day like today, they're like, I'm out. I'm done.
Yeah.
This is it. I'm cutting bait here until they give me some good news. So that's what I'm looking at. Spotty trading here, down $5.50 on 3,200 shares.
All right, go Dave and Buster's play here. Who's playing at Dave and Buster's? Who went to Dave and Buster's in the last quarter? I know I went at least one
Nice.
time.
Help it out
The
the cause,
EPS
Mitch.
was 64 cents, missing the $1.07. Sales at 468.36 million, beating the 432.91 million estimate. But I will let you know, Dave and Buster's was struggling on employees. Like, I was at the restaurant and I was like, yo, are we going to get service here? Like,
That's trouble everywhere. I mean, there is a labor shortage here still. And like I've said, when we go to a restaurant, it's like the service is poor, and the reason
rather
the
stay at
service is
home
poor
sometimes.
is that they're running on they're running on half the staff they normally do. A lot of these restaurants, it's really tough. It's tough. Restaurant business, absolute toughest right now. Getting squeezed on the wages, getting squeezed on material costs. It's rough. It's going to hit the restaurants the hardest, and these are stocks that I don't want to own. Dave & Buster's, I wouldn't want to own it either here. I mean, it's come back nicely off the lows. I think it's just another opportunity to sell it, though.
They traded some volume on that spike down, because someone's asking about that candle, and 160,000 shares traded in that bracket when they slammed it down to 39. I think you got a reference point here just from from yesterday's session. I stick with it, 42.13. That's your pre-market low. I think that if you're trying to bigger short in, maybe bring it in there. But just this whole 42 area looks pesky. So I know it's not a great report. I know it's traded down, but I still see support in there. And I'm sure a lot of people would like to see that close. I'll make the close major resistance at 43. Oh, that's way up there, 43.94 for Dave & Buster's, the adult Chuck E. Cheese.
Sure.
All right, now let's go over and take a look at, of course, I mean, we've been following this story for a while, but Kathy talking about deflation coming on in here. I'm going to really quickly just put a bow on a lot of the comments. You guys can check out the thread that I posted on Twitter, or you guys can check it out. I know Dennis also reposted it there. But a lot of what it comes down to is the last statement here. In the pipeline, inflation is turning into deflation. One of the best inflation gauges, the gold price peaked more than 2 years ago in August 2020. She said also that lumber prices have dropped more than 60%. Copper has dropped 30%. Iron ore has dropped 60%. And DRAM has lost 46%. And crude oil down 35%. So pretty much calling out Jerome Powell, saying that she believes he is making a mistake.
I mean, obviously, she's talking her book here. I mean, she is positioned and has been positioned for deflation. And she has been preaching deflation for 3-5 years. She has been dead wrong, and her ETF punished severely for her being dead wrong. With that being said, in the short term, she is correct here. We have seen commodity prices come down substantially. That is probably going to show up in this month's CPI data. So that is why her argument, which has been dead wrong for 3 to 5 years, or maybe I'm going long, at least 2 to 3 years, is maybe going to be correct for the next week. So I'm positioning myself a little bit more biased long right now on the trading side, because I think she's going to be right this week. Only for this week, though. And then Powell's going to pull the rug out again.
40. We talked about that area. So just looking at the ETF, it did, under 40, came down from 54. three lows in the same area. So I'd be leaning to the long side here with that stop just under 40. Using the gold indicator, she kind of like when you started reading that comment, you kind of lost me right there.
Yeah, she lost
I
me
just
right when
don't
she
think
mentioned gold.
I don't think gold is that indicative of absolutely anything because it just hasn't. I mean, it had its day.
Gold's its own thing.
Yeah, it's
and you know
hard to
what?
start a conversation like that.
Precious metals have lost their luster. It was a show and display of wealth. The new generation is not into it. There's a long-term secular decline in gold for a reason. At least, in the last, well, I guess I shouldn't say it hasn't really happened like that. But I mean, where did gold top out back in the 80s? Where do we know? Like,
it was 2000, wasn't it?
I feel like it was higher than this. Like 40 years ago, I feel like the price of gold was higher. I know the bulls will come in and say, oh, it's keeping right up with inflation. Not if you bought it back in 1980. I'll tell you that. I don't know. Does anybody know where gold was in the 1980s? I think it maybe we're too high, Joel. Maybe it wasn't that high. But it definitely has not kept up with inflation. If you have gold on for an inflation hedge, you have been underperforming for a long, long time. Zibbity Doodah says 800. That might be right. But think about that. 800 to, it's still like if you just think about, okay, 800, I got out of the physical 2000. I'm just looking at the comments here. I was just wondering where it was in the 80s. I thought the chat might be all over it. But let's just say, let's just say it was 800. I mean, so gold's basically went up 150% in 40 years. But a terrible investment.
All right, let's keep going here with First Solar coming in, rising more than 4% after Goldman Sachs double upgrade. Brian Lee, the analyst, wrote, on the demand front, we see FSLR as one of the best levered to U.S. demand tailwinds with our solar panel supplier coverage, as the U.S. accounts for roughly 80% of the company's revenue.
Boy, oh boy.
Can't stop it.
I'm not buying it. I'm not shorting it. Give you a target on the upside, 140, 154. After that, I mean, if I have to go back this far into monthlies, then it's it's probably, what is the next monthly? I see 2 monthly highs at 141. So a couple monthly highs there, but strong trend, hard to step in front of it.
Joel, I just look at this and it was $60 back in July, and now it's 139, and now you're upgrading it. Now you're coming in and getting bullish. The stock just went up 150% in a month and a half. In literally like 30 trading sessions, the stock is up 150%, and now you're buying it backwards, doing it backwards. But with that being said, what was Nick Shaheen or I say? What was his saying? Too hot to chase, too high to buy, too hot to
chase.
Yeah, too hot to short it. I think that's right. You're shorting a rocket ship. I never make a lot of money playing rocket ships, so I'm just out. I'm not going to make a call on this.
I just gave you that level. Coincides with the call of monthly highs. So if you have targets in this area, then go ahead and take them, or just comfortably move your stop up. If you want to leave a little meat on the bone, move your stop up and get taken on when the momentum declines. But you could see it had that pop and just kind of hanging out.
Yeah, look at that move from ENPH yesterday too. That was so significant. I think keep your eyes on Enphase also if you're looking at First Solar. All right, let's keep going. Let's go to Disney here. Disney's former CEO, Bob Iger, the pandemic fundamentally changed how audience consume media, leading to smaller foot traffic at movie theaters. So taking a shot at the movie theaters, former Disney CEO also stated that I don't think movies will ever return in terms of movie going to the level that they were pre-pandemic.
And it's scary for the movie theaters when he says stuff like that, because obviously Disney produces some of the best movies. And if he starts just going direct to Disney Plus, which, is a distinct possibility, skipping the movie theaters, holy, that would be just the worst thing for the movie theaters. So, and it's not out of the realm of possibility that Disney might just start going direct to Disney Plus. Here's your $29. You can watch the new movie around Disney Plus. It sets up well. Disney's so smart. I mean, the one thing is, I'll say long term, this company is going to be in the, once we get through the recession, and it's why I'm a little bit cautious, on the stock. But once we get through this, Disney is set up so well for the metaverse. They're set up so well with the Disney Plus. You know, they produce this content straight to Disney Plus. Here you watch a movie for $29. Boom, they're making all that money direct. I mean, the theme parks are still the theme parks. Disney has just got it all figured out. Genius company. I've got to just say, and wow, we're getting hit here again on my comments. Not on my comments, but as I'm commenting here. I got to just say that long term, if you get a shot back at Disney in the 90s, I think you take that shot with two hands.
All right, let's keep going. I got another one here. Let's go towards NIO. And this was a comment from the earnings yesterday. I thought it was important because we've been focusing on what happened with NVIDIA, right? And so one of NIO's chip that's very important to them is, of course, brought to them by NVIDIA. And so this is why the comments were made. We believe that this will not have an impact on our business operation. William Lee, founder and chairman of CEO, said via the earnings call. And so this is something that I want to keep on watch, because if they're not able to get the chips because of the whole license issue that's going on with NVIDIA, it could really affect some of the Chinese EVs.
Christine Lagarde is no Draghi. That's all I have to say. I mean, she's walking this market right down right now. She's speaking in Frankfurt, Germany, and that's where you're seeing the pressure. Just one thing, going back to the Iger comments. I mean, it was a trend before the pandemic, and that was one thing that Gene Munster talked about. There were trends before the pandemic. The pandemic accelerated the trend of the no movies. So just
for
going
sure.
back to that.
I mean, you're exactly right, Joel. It did. It accelerated, and then we got a bounce back and a snap back. Oh, everybody's going back to okay. Well, we're going back to normal. Hit on all these stocks here, so I'm losing my train of thought. Boom, boom, bot.
Go, Dennis. Dennis, there's only 4 minutes left.
It's okay.
We could take it from here.
But I don't even remember what we were talking about, because I literally got filled, and I was like,
all right, all over the place. This is a jump all over the place. Let's take a couple tickers.
Don't do market making and do a live radio show at the same time.
Let's just do one or two tickers here and then wrap it up for today. We've kind of been all over the gambit. Let's go Ash Ketchum. I've never seen Ash Ketchum come in with a stock. And AEO, that's a retailer. And we're down $1.52. So do they have some bad earnings or something? News me on AEO.
I get you right now. That's more than likely earnings on American Eagle Outfitters. Let's go ahead. Let's get some of those numbers here. Looks like they came in with a EPS at 4 cents, missing the 14-cent estimate. Sales at 1.2 billion that were in line. Oh, so the EPS, big miss there. 4 cents, missing the 14-cent estimate.
You're taking out the low of the move at 1082. I'll use 1082 as resistance, even though it's not part of yesterday's range. They whooped it up. It's a lower price stock. I don't know if you're going to get a shot at 961. So I'll put 3-star levels there. 3-star support, 961. 3-star resistance, 1082. That was the former low of the move. We're completely falling out of bed here. I wish she would stop. What is she saying here? She is just slamming the market. Whatever.
I think we get down to 394ish. Let's do 50% of I love 50%. So let's do 50% of yesterday's move. So 390 up to 398, 394. I think I'm taking some longs at 394 SPY. So another $20 down from here. Another $2 lower from here on SPY. I think I'm buying some stocks.
Yeah, TLT.
Not long term. Not long term.
Okay. All right. Mitch, any comments on that? At AEO is kind of a tough chart here. Any comments on that?
No, I'll just keep watching. It's an apparel company in a situation right now where I don't think too many people are going out to, freshen up their closets right now. So it's not something that I would be looking at as an investment. I'll leave AEO alone. Let's keep going. Let's do one more. Sabrina wanted to look at CRM. So let's go ahead. Let's get into really
CRM, and I'll do that. And then I'm going to hop Salesforce. You mentioned that is like just a super beat up stock yesterday.
Super beat up.
You have 3 lows in the same area. It looks like we haven't breached it yet. On the dailies, just at 150.50. You got to hang with it. I'd just be caution. 4th time down. Takes it out. Katie bar the door. So 150.50 must hold on that one. You're trading down. I'll give you a resistance at the resistance is up at the close at 153.28. So, all right, I'll let you guys take it from here. We'll see if we can catch a bounce.
I'm out
sometime
too.
today.
It's just been too much chop here today. So a lot of news here. Head on a swivel. Powell going to be speaking here soon.
Yeah, don't forget
Head
that
will
too.
continue to stay on a swivel. Again, I think I'm positioning slightly to the long side on the pullbacks here, just trying to get ahead of next week's data, but I don't want to be early either. So it's tricky. Like we're a few days, we're still 5 days away from that, Mitch. You got all today, Friday, Monday,
so much
Tuesday.
until then.
Yeah, it's 4 days till then, till that CPI data. Is it Tuesday it hits? I'm trying to remember. It's Tuesday?
The 13th. So I'm pretty sure it's 6 days from now. Yeah, we'd be looking at Tuesday. Yeah,
so you got at least 3 full trading sessions before that. I want to be there. I want to be long ahead of it, but I don't want to be long and then boom, 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 you go down and then you get the pop you wanted and it's just getting you back to where you wanted to be. So it's a tricky market. I'd like to buy the pullback here somewhere.
All right, Dennis, go ahead and get on out of
Mitch.
here. Go handle the markets. I know it's tough out there, especially when you're seeing the action and, like he mentioned, positions filling, and he needs to go do what he does best, which is trade, of course. We'll get you guys over to live trading action. That's coming on next. Like always, do me the favor, guys. If you guys can hit that thumbs on up and the subscribe below, that's really how you support us and keep us on every single day live for free. Of course, that's why we do the show. We want you guys to enjoy and be in the informational edge. Hope you guys enjoyed today's show. If you have any feedback, leave comments. That's really where we definitely can go ahead and catch your feedback and try to do better than we've done before. Now over to live trading. And I'll see you guys next time right here on Pre-Market Prep.